Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 4 o'clock in New York on Monday the 24th day of November 2014, and this is the daily report for gold and silver. First, it is great to be back in Honolulu, my home base, and actually to be able to produce my show on my regular system rather than my laptop with a very, very slow internet connection. It was challenging at best. In Bali, it was pretty much impossible as the internet connections there are extremely, extremely slow to the markets. We do have gold trading lower today, off about $4 on the day, $1197.40. Now, it's been able to pop its head above 1200, 120,280, that's the high, low 192.50, so roughly a $10 range, trading roughly in the middle of the range. You can see we've got a 230-minute chart up. You can also see this defined resistance at about 1207, 38% retracement based on 1254 down to 1131. We'll talk about that in a second. Traders, we do have a different story in silver. Up ever so slightly, up about a penny on the day, 1646. But unlike gold, which has really been range bound, we'll talk about that as we cover gold on today's show. But we have a definitive bottom that we can really see in silver at around $15, currently trading about $1.50 off of that. And what that tells me is that silver is finally beginning to act more as an industrial metal, although we do have platinum and palladium down today. We'll talk about silver a little bit more towards the end of the show. Low today 1620, high 1648 on the day. Traders, I do want to start today's show by looking at this very short-term chart. Of course, this is a 230-minute chart. It's in Japanese average format, time permitting. We'll put it into regular candlesticks. But here are my current observations. As we take a look at how this market traded, it absolutely found a bottom and some support, tentatively at least, at 1130. That was the low that we had. At that point, we saw this market spike quite nicely. Now, I do have one fib retracement. This retracement is, as I said, 654 and 1130. I'm looking at the top of the market to where it found some support. And as you can see, it popped right up, and it popped up to this 61% retracement right in here, and then began to go lower. Now, I've got a secondary fib retracement that's on this side, or the right side of the screen, and on this one, as you can see, we do have a harmonics here, 61 and 76. So as the market traded, it came down to a 76% retracement of this move, 1207. 1207 being pretty important, as I said, because it's a 38% retracement of this entire move here. Now, here's what I've noticed. As the market came, it found some secondary support, did not make a new low, rather it made a higher low, and then made a series of higher highs here. So we do have a market that's currently trending to the upside. That's quite obvious because it's moved off of these lows of 1130. However, as of right now, it's absolutely found some sort of resistance, and that resistance band right now is between, call it 1180, right in here. You can see the support area right here, and our resistance area, which is this 1207 area. My sense is that it could be forming a base, but all things being equal, we could see, absolutely some continued downside pressure in the gold market as we go into the holidays. Of course, we have Thanksgiving this week, and then of course we go into the Christmas holiday season and then into New Year's. So my sense is that it has not been really able to sustain any kind of move at 1200, form a base and trade higher from there. And in fact, what we have seen in this market is on each and every occurrence in which the market did challenge move above 1200, it had a high roughly of about 1207, and that's been about it. It seems to be wanting to close just below this 1200 mark, this $1,200 mark, being right in this area here with this line. So traders, of course, the markets that we have been following to gain some sort of insight into the future move of the precious metals market, specifically gold, has been the equities markets and the dollar. Now, the dollar has had an interesting move as of late. We can see market comes up, we get that 38% retracement, moves to new highs about 88.50 on the high, and you can see that on trading as of yesterday, we did break above this particular area. Let me get this as straight as I can. We did break above that. That's this green candle here. However, today we do have slightly lower prices, kind of coming back right to that point. So what we want to see is whether or not this congestion area we've seen over this last week is going to be a base moving to higher prices, or could it be a potential top? My sense is that we will see higher pricing in the dollar, and one of the reasons really is the equities market. And traders, we're looking at the S&P, the E-mini, but it's the S&P 500, and we've noticed as this market's moved up, of course, we've seen a series of pretty dramatic retracements, this being one right here, this being a dramatic retracement, comes well below this channel, but it also moved back into the channel here. Now, in terms of on a technical basis where I think we could see this market go, if we look at this upper band channel, you can see that we're still a ways away. If we project on this channel, you wouldn't really hit a top till about 2100 on the S&P 500. So I still think that there's a ways to go on the upside, all things being equal. Now, to take a longer term view of the market, I've gone ahead and pulled up, this is a 2-day chart, a Japanese average format. It also has a simple moving average of 28 days. It's 14 cycles on this chart. So it's roughly a 30-day moving average. That's the reason that I put it there. Without a question of a doubt, we see the market hitting these lows right in here, roughly at 11:30, moving back. On a 2-day candle, Japanese average candle, the market has moved back up. And most impressive in terms of the move is the fact that it has moved back above this real critical area. Why is this area so critical? Well, I believe it's critical because what we're looking at is this series of bottoms, this triple bottom here, our fall from grace to a new low, and now trading back above this area. So in terms of resistance and support in this market, I'm currently pegging resistance at 1207. I'm currently looking at support roughly at 1180. My sense is as we go into the holidays right now, we are going to have, at least in the U.S., that market beginning to thin in terms of trading volume and activity. And my sense also is unless I see a base forming above 1200, I have to remain in terms of the long term, fairly bearish in terms of gold prices. And I still believe that unless we form this base here, we could make a play for lows that are below the current low at 1130. So what about silver in terms of current support and resistance levels, and what are we looking at in terms of the upcoming moves over the next week or so? Now, I've created one basic fib retracement. In terms of price structure, it's very, very similar because I'm going from the most recent top, this one being at about $21.60, to our low at about $15. So quite a move when we look at the $6 fall from grace. Obviously, $15, we found support in the market. I think that we have current resistance right now at about $16.62. You can see that that also matches up quite eloquently with the current highs. We also see this particular price point or area be very supportive right in here. So support right now, $15 we have some support, but I think that in terms of short-term support, it's really at 16. You can see that based on these series of lows here. So we have support at 16. We have resistance right now at 1662. Should we take out that resistance of 1662 and see the market continue, we could get another dollar out of that before it hits a 38% retracement roughly at 1750. Traders, thanks for your patience and understanding as I traveled through Indonesia giving a series of lectures to gold traders there. We'll talk about that in the upcoming shows. Secondly, we will be offering our loyalty program. I only offer it once a year for a period of roughly 2 to 3 weeks, in which those who have been members or current members of the Gold Forecast are able to set themselves up next year at a substantially reduced price so that they can enjoy the Gold Forecast without any interruptions through the next year. More information on that in the next few days. This has been Gary Wagner wishing you, as always, good trading. I'll talk to you tomorrow from Hawaii. Have a great day. Bye-bye.